Hi everyone, welcome back to Corporate Decoder, the place where we decode the corporate world. Today we're diving into the financials of Oyocar Group Inc. and boy is it a wild ride. Buckle up because it's a bumpy one. We will investigate a company that sells used cars and try to understand if it's making money or just burning rubber. The answers might surprise you. Let's start with the basics. This is their quarterly report, or 10Q, which means it covers the period ending in February. So we're looking at the most recent financial snapshot of the company, and this report tells us a lot about where they're headed, maybe not in a good way. Now let's look at the money. This report will tell us how much they made, how much they spent, and how much they lost. We will focus on those key figures that paint the real picture of this company. First, let's peek at the balance sheet. This is like a snapshot of what the company owns and owes at a specific point in time. As of February, their cash and equivalents, that's the money they have handy, were at $9,459 they had back in August. On the other hand, they had back in August. On the other hand, back in August, and mainly used cars went up significantly from 15.8 at 51, 15.8 at 51, 15.85 down August. On the other hand, their accounts receivable, the money people owe them, increased to $10,278 for the $1,2254 they had back in August. On the other hand, their accounts receivable, the money people owe them, increased to $10,270 51 15.80 51 $15 they had back in August. On the other hand, their accounts receivable, the money people owe them, increased to $10,205 they had back in August. On the other hand, their accounts receivable, the money people owe them, increased to $1,000 significantly from $15,770 51 $15,080 $15,020 5. Looking at the other side of the balance sheet, we can see that they owe $15,008 and $33 to related parties, such as their managers and directors. They also now have $10,000 in accounts payable, which was zero in August, which is similar to the 30 Swassen Toe to $54,442, which is similar to the $36,408 they owed in August. Finally, their total equity, their net worth, is $21,000 in accounts payable. Compared to $54,442 in $200.30, their net worth is $21,155. $4,002 owe more money to suppliers. Their total liabilities are $34,442 in August. It's clear that overall, Oyocar's financial situation has worsened since August. Now, let's move to the income statement, also called the Statement of Operations. This shows how well the company performed over a period of time. For the 3 months ended in February, Oyocar had $44,8500 they made in the same period last year. However, the cost of goods sold, that's how much it cost them to acquire and fix the cars, was $41,090 T22, leaving them with a very small gross profit of $2,012 to cost them to acquire and fix the cars was $41,962, leaving them with a very small gross profit of $2,1. $110 they made in $500 they made in the same period last year. However, the cost of goods sold, that's how much it cost them to acquire and fix the cars, was $41,1962, leaving them with a very small gross profit of $2,001 to cost them to acquire and fix the cars was $41,1962, leave $100 the cost of goods sold, that's how much it cost them to acquire and fix the cars was $41,1962, thus leaving them with a very small gross profit of $2,001 and $23. Then comes operating expenses. For the 3 months ended in February, they spent $4,417. Mostly on general and administrative stuff. Overall, this means that they lost $2,294 for those 3 months. Still, it's better than the $5,554 they lost in the same period of last year. But when you expand to look at the full 6 months, the numbers get even more alarming. The losses expand to $33,267. One last number to look at is earnings per share. Since the company is losing money, each share is losing value, although the loss per share is so small to be practically zero. The statement of changes in shareholder equity is kind of a summary of all transactions regarding the company's stocks. It doesn't have much to look at this time. Now let's peek at the statement of cash flows. This shows how the company is generating and spending cash. For the 6 months ended in February, Oyocar used $33,166 in operating activities. As you know, this in figure $6 in operating activities. As you know, this figure needs to be positive for the company to be sustainable. They didn't make any investments and they didn't raise any money through financing. They started the period with $42,620 as draining money through financing. They started the period with $42,620 as draining money through financing. They started the period with $42,620 620 is earning money through financing. They started the period with 42,620 is draining money. Through financing, they started the period with 42,620 is draining money. Through financing, they started the period with 42,620 is in cash and ended with only 9,000 and they didn't raise any money through financing. They started the period with 4026-2020 come February. Now that we've looked at the numbers, let's dive into the notes that explain what the figures mean. Oyocar Group is a car dealership. They sell used cars both in the US and in the Dominican Republic. That's a tough business with a lot of competition. Probably the most concerning part of this report is the going concern note. This is where the company admits that there is substantial doubt about its ability to stay in business. It means they have lost so much money that their very existence is threatened. They need to find more money either by getting loans or selling more stock, but there's no guarantee they will be able to do that. If the company fails to be a going concern, it might not be able to recover its assets or pay its liabilities. Most of the rest of the notes talk about accounting policies and other technical details. It is important to understand the accounting policies of a company to understand its true financial state. They are authorized to issue 75 million shares, but only 15 million are outstanding. It's worth noting that the company's sole officer and director has loaned the company $15,803, which is due upon demand. This means that if he demands the money back, the company might not be able to pay. Now let's switch gears to the management discussion section where the people in charge try to explain their numbers. They claim they are going to be funding operations with existing funds and the sales of additional securities, although their own numbers might be telling a very different story. They also state that they don't have off-balance sheet arrangements. Finally, in this section, they admit their own disclosure controls and procedures were not effective. This means the company itself doesn't trust its own numbers and reports to be accurate. The rest of the document is mostly legal disclaimers and list of exhibits. There is no indication of legal issues that might threaten the company. Now, stepping back and looking at the big picture, Oyocar Group Inc. seems to be struggling. The numbers don't lie. While revenue increased, their costs are too high. Their cash is dwindling, and there's a real risk they might not be able to continue operations. They need to either drastically increase revenue/costs or find a generous investor and fast. The company also admits that its own financial controls are not adequate, which is a terrible sign and might mean they are just unaware of the true magnitude of the problems ahead. To see little upside and a lot of downside to this company. Thanks for watching. If you found this analysis helpful, please like, subscribe, and leave a comment below. Until next time.